With the recent conclusion and recommendation from the National Economic Council in Abuja, the council considered recommendations for the National Salaries, Income and Wages Commission to pay 702 billion naira's cost of living allowance to civil servants as part of subsidy intervention plans. The Economic Council also announced the setting up of a committee to work out within 2 weeks the modalities for organizing and distributing the planned palliatives for the federal government. This followed the directive by President Bola Tinubu that the council comes up with interventions to address all of this. But let's look at the impact of subsidy removal itself in its actuality and what we really see at the moment. And joining me to discuss this is a partner, oil and gas leader at Deloitte Nigeria, Mr. Olumide Esan. Thank you so much. It's good to have you on the program.
Good afternoon. It's good to be here this afternoon. Yeah.
Yes. First, let's take it back a little and talk about the subsidy removal thing. Many would say it's a demand and supply market. And of course, they expect maybe this flip-flop. But some are not thinking that the price of PMS might still continue to go on the high side. We started with about 500 naira. At the moment, in some places, even selling for more than 600 naira. What really is reflecting here? What are we seeing playing out here?
So thank you. And so again, I think you already addressed the issue yourself. It's all about market factors. So you really can't predict what will be the exact price through the year. It will depend on the market movements, particularly of the price of crude oil, which is a function of demand and supply, but also geopolitics. So, but what we've seen over the years is you see that fluctuations, from high to the lows, but oftentimes the refiners, you see that the margin is adjusted at the refinery level. So that fluctuation of the crude oil price itself doesn't have that exact amount of fluctuation when it comes to the pump price of petroleum products, because what happens is sometimes refiners benefit, sometimes they don't benefit. But again, I mean, looking at Nigeria, subsidy was hurting our economy in as much as it made life easy in some ways. But from the analysis that we did earlier, you would see that in the article we released, we had budgeted 18,000 naira per capita for subsidy for the first 6 months of 2023. Whereas, for the full year of 2023, we budgeted, there about 9,000 naira per capita for health and 6,000 for education. So if you would project, the subsidy for a full year would amount to 36,000 naira per capita. So how can a country, budget 36,000 naira per capita for subsidy and budget, a quarter of that, 9,000 for health, and even 1/6 of that, 6,000 naira per capita for education? So it was an inevitable thing that happened. But then, as a nation, we then need to move forward. We need some intervention from government to ensure that we can all deal with the consequences of removing subsidy.
A good way to start, but I'm going to ask you again that some are saying that this move has actually clearly exposed that issue around consumption level, what we consume on a daily basis. Let's look at this basis. At the time, it was projected to be more than 50 million liters a day, about 60 even at a point. But as of today, major marketers are saying, no, we are not doing more than 30 to 40 million. What's your take with regards to that, and how do you think subsidy removal has impacted this? Talking about level of usage and consumption of PMS.
Yeah, so thanks. Prior to the removal, NNPC would typically tell us that we consume, or we lift between 65 and 68 million liters a day. Of course, with removal of subsidy, that number has dropped to there about 40 million liters a day. Now, what are contributory factors to that reduction? I think the biggest factor is the fact that with market pricing and parity, there is little incentive to smuggle across the border, right? And even if you do smuggle across the border, the margin is not sufficient for that risk. So if you're going to be able to sell it just slightly above the cost price in Nigeria, then the travels, the travails, the risk just not worth it. That is the most significant factor. Smuggling actually decreased. But there is also the other factor, which is the fact that when things are more expensive, people put on the economic hats when they are using or utilizing such resources. So that's the reduction, obviously, in the amount of fuel consumptions per average car in Nigeria for the average Nigerian, because then you are mindful what you do with your car, when to switch on the AC, when to switch off the AC. So there is, there is a slight also reduction in terms of, local consumption in our cars. But by far, the largest, factor is the smuggling bit that went down. Yeah.
Now, let's talk about merits and demerits of subsidy removal. I'd like us to highlight it because the challenges Nigerians face at the moment, they think that the demerits now outshines the merits of it.
Well, so I always like to start with the merits, and they're just very, few but very significant merits that I'd like to talk about. One is the fact that it can free us as a nation of the burden of almost, 7.2 trillion that we'll have had to use to subsidize, fuel this year. If you have 3.6 trillion for the first 6 months, that's 7.2 for the full year. For a nation which we already kind of said we would use 73% of our 10 trillion expected earnings this year to service debt. We're going to use, 73% to service debt. I mean, the question is we can't afford subsidy. So that burden being taken in from the government ensures that, that fund is redirected. It's redirected towards infrastructures, towards the healthcare system, towards education. And of course, it would help to reduce the borrowing. Already, we have a 37% debt to GDP ratio, which is already on the high side. We're closer to 40% to GDP than we've ever been. If we do not, take this heat of subsidy, you will see us surpassing, 40% in debt to GDP. So I think it's important that we save that money and redeploy it to the productive sector of the economy. We redeploy it to productive sector of the economy. We also put it in infrastructures, advanced transportation systems. And look, these are not going to happen overnight. But that is, for me, the first real advantage, real merit of removing subsidy. The second bit is, each time you have subsidy in the mix, it means there is regulated pricing. And, investors will always be reluctant to invest. You don't want to build refinery worth billions of dollars when the selling price will be controlled by government. To ensure that there is investment in the downstream, which requires a lot of infrastructure, including, pipelines and pipeline networks across the country. That was why Section 205 of the PIA provides for cost-reflective, pricing in the downstream. Let people pay the right price for the products. That way, government won't have to be shouldering the burden of downstream investments. Private individuals, private investors, local and international, will bring in funds to invest if they know, that the prices won't be controlled by the government. And of course, the twin of that is the FX regulation, because if people are going to bring in foreign direct investment to the country, they must also be guaranteed that when they're ready to exit, they can exit as well at the prevailing rate and not at the controlled rate. So for me, these are really very huge merits of removing subsidy. I think the third one is, each time there's subsidy, there's always a potential for corruption, there's always a potential for mismanagement. So by eliminating subsidy altogether, we can deal with corruption once and for all. So I think if you look at these three merits, they're worth celebrating that we removed subsidy. However, there is a cost, okay? And if you look at the article we shared the other time, we said short-term gain and long-term gain. That there are pains in the short term, and one of which is the fact that you see increased cost of transportation. And of course, what that has meant is general prices have gone up. So people are dealing with the inflationary effects of that removal of subsidy. It's now more expensive to move from point A to point B. And, general, it has led to a cost of living crisis, for a number of Nigerians. And that is why it is important that the government must do something immediately, to assuage those, concerns of inflation and erosion of the value of living in Nigeria. So I'm happy at the statement made by the president yesterday, because that shows that he's also listening, because we as Nigerians, we are complaining, we are shouting, because we are feeling the heat, we are feeling the effect of the removal of fuel subsidy.
Interesting. Inflation would also rise as we move on, of course, in the subsequent months. That is what some are also worried about. And if that happens, and minimum wage is also increased on the other side, what sort of figures do you think will end this year with? Talking about inflation figures now, and MPC has been trying one way or the other to rein in inflation, and they are increasing rates, which seems not to be working too. So where do we strike a balance?
Yeah, so although the line was a bit cracky, but I think what you're talking about is inflation, right? The
Yes.
effects, and also the fact that when salaries are increased, when wages are increased, it also, aggravates inflation.
Perfect.
Right? Yeah, I mean, it's a painful one. The month before, that's May, we had 22.41. Last month we moved up to 22.79, and of course there are fears that it could escalate further. The reality is that we've always been on that upward trajectory for some time now in terms of inflation. But I believe the secret to arresting that is investing in productive sector of the economy, because what drives inflation in economics 101 is if there are a lot more demand than supply. So we have, if you look at our own inflation, our food the inflation basket, you see that the biggest chunk is actually food and the food basket. So if we can control the inflation on food, then general inflation can turn downwards. And I think that is why you see in the speech yesterday, the president is focused, 200 billion committed to agriculture, 50 billion committed to the grains, rice and maize, and another 50 billion, committed to wheat and cassava. If we can bring down the cost of food prices, because it's the weightiest in the basket, you will see that the general inflation will taper down a little. But having said that, the concerns are real. There is a sentiment that each time there is a wage increase, that you tend to see, inflation on the rise. And I think that would need to be managed by government. And I like the various, interventions being rolled out. The transportation system across the country, 3,000 of them. Conditional grant, cash transfers, subvention to nano, small and medium companies. The big, 75 billion available for 75, manufacturing companies. I think that with time, we would see a reversal of the inflation trend. But again, just like every other thing with economics, it does not happen overnight. It needs to be carefully mapped out, and there has to be discipline in execution of the various intervention measures that the government is rolling out. But I also recognize that we're dealing with massive increase in interest rates, because of course it's been following the rates in MPR over the months by the CBN. Once we start to, you will see that interest rates will start to go down as well. Hopefully, the MPR rates will start to go down, and then you see economic activity starts to bump up again in Nigeria. So it's a pain that we all must go through in this short-term period. But let's look at the big picture, which is a long-term gain. In my view, for us as Nigerians, we need to hold our leaders accountable. If they have given us their words, they feel our pain, they're doing this in our best interest, let us also hold them to those things they said they would do. So that, this time next year, they won't still be saying to us, oh, bear the pain. Okay? If they said bear the pain, now we will bear the pain. But, don't come back to us next year and tell us a different story. We want you to do all the things you have promised to do so that this economy can expand. If this economy expands, a lot more Nigerians will be more productive. And then you will see there will be a general living wage increase, which doesn't even need to be sponsored by government, because you see private companies already. The president recognized that yesterday. There are private companies that have increased wages already. But you see, these things are all tied to productivity of the economy. An economy that is shrinking, that is not producing, will always struggle with funds. And that is where we do not want to be as a nation. Governments, in addition to these interventions, needs to also create the enabling environment for small businesses to thrive. It's a good, it's a good start to have this, 125, billion dedicated to nano, small and medium enterprises. It's a good one to have the 75 billion available for manufacturing companies. But government needs to go beyond that, to create an enabling environment. The CNG buses, it's one stone killing two birds. One, it's an indirect, intervention, but also it helps Nigeria to play in the space of energy transition, because we all know eventually we want to leave fossils when the time comes. But at this time, let's leverage on our huge deposits of natural gas to industrialize our economy, but also in our transportation system. We're already using it in power. We can do more. But you see, we need to harness all the resources we have to get Nigeria to that place where we want it to be, where it can compete with developed nations across the world.
Well, interesting way to leave it. But if we can do this in just 2 minutes, I'd like to ask you, in the implementation of the PIA, deregulation and all of that, analysts have argued that removal of subsidy is just a phase of our deregulation. So where are we with regards to deregulation? You would understand that better.
Yeah, so first, we need to look at the PIA from the construct of the value chain. So we've got the upstream, the midstream, and the downstream. Largely for a long time, the upstream has been deregulated. Companies pay market price for labor, for equipment, and contractors to produce, which they then dispose of the hydrocarbon. I think the issue, I mean, if you're looking at the regulation in the context of what is new in the regulation, is largely in the midstream and the downstream. So, for example, you see government-controlled enterprise like NNPC now being registered as a company under the Matters Act company, and the idea is with time, government control will reduce. Eventually, when government starts to sell down its shares in the company, which is currently held by Ministry of Finance Incorporated and Ministry of Petroleum Resources Incorporated. But the bigger picture is particularly in the downstream, where the subsidy has been, and that is really where the regulation needs to happen fast, so that all the infrastructures held by government, some of the gas infrastructures, can be commercialized, already they're working on that. I know that, there can be a lot more competition, because what you want to achieve by the regulation is, one, to avoid subsidy, and then two, to create constructive competition, which is what they're trying to work towards, the midstream and the downstream of the Nigerian petroleum sector.
I must thank you so much for your time, partner Deloitte, Olumide Esan. Do enjoy the rest of your day.
My pleasure. Thanks for having me.